Assalamualaikum Dr. Ruslan. We are from Group 3, delighted to present our group assignment topic from the question 4, which is the role of Fintech in shaping the future capital market. First and foremost, allow me to introduce our group members. My name is Zulfikar Arsad. Together with me, Adam Fitri Shah Abu Bakar, Amir Azhar, Muhammad Amirul Muhammad, as well Muhammad Haziq Rahman. Next, let's we go to Amirul to explain about what is fintech. Amirul?
Assalamualaikum, my name is Mama Amirul. Okay, what is fintech? Financial technology, or better known as fintech, is used to describe new technology that seeks to improve and automate the delivery and use of financial services. At its core, fintech is utilized to help companies, business owners, and consumers to better manage their financial operations and processes. It is composed of specialized software and algorithms that are used on computers and smartphones. Uh, Fintech also includes the development and use of cryptocurrencies such as bitcoins. Whilst that segment of fintech may see the most headlines, the big money still lies in the traditional global banking industry and its multi-trillion dollar market capitalization. For currently, China still leads the world in fintech. So far, the development of fintech in Malaysia, we break into a few points. The first point is for the regulatory environment. The regulatory environment in Malaysia has been evolving to support fintech development, while our central bank, Bank Negara Malaysia, has been very proactive in fostering the fintech innovation while ensuring the consumer protection and financial stability. BNM also introduced the regulatory frameworks such as the licensing framework for digital banks and the fintech regulatory sandbox in order to facilitate the fintech experimentation and growth. Secondly, we can see the development in the digital payments, where Malaysia has seen a surge in digital payments adoption, such as e-wallets, mobile banking apps, and contactless payment options have become very popular among Malaysians, especially in urban areas. So, various fintech companies have emerged to offer digital payment solutions in order to making transactions more convenient and accessible. We also see there is a development of the peer-to-peer lending. It is a platforms that have gained traction in Malaysia. It is provide alternative financing option for individuals and businesses. These platforms connect borrowers with lenders and bypassing all the traditional financial intermediaries. Government also has been very supportive of P2P lending as it addresses the issue of financial inclusion for underserved segments of the population. In terms of the blockchain and cryptocurrencies, Malaysia has shown interest in exploring blockchain technology and cryptocurrencies. While there has been a cautious approach to regulate the cryptocurrencies to prevent misuse, government has been open to exploring the potential benefits of blockchain technology for various sectors beyond finance. We also can see the newly emerged of the robo advisors that this service has gained popularity, particularly among tech-savvy and younger investors. These platforms offer automated investment advice and portfolio management, and it is often at lower cost compared to the traditional financial advisory services. And lastly, in the financial inclusion, fintech has played a vital role in promoting financial inclusion in Malaysia. By leveraging technology and mobile device, fintech companies have been able to reach the unbanked and underbanked populations, providing them with access to basic financial services.
Assalamualaikum. Hi, Haziq here. Thank you, Amirul, for the discussion on the introduction and also the development of fintech in Malaysia capital market. So now we go to the issues and the challenges of fintech in Malaysia capital market. So in recent years, fintech has brought about a big change, disrupting many business verticals, especially in the financial industry. It has improved and many aspects of finance such as the money lending, the payment processing, the insurance and more. Furthermore, with the COVID-19 pandemic has pushed many industry players, especially to convert into digitalization payment for the first time. But the majority of customers still choose more traditional financial institution instead of fintech because of various issues and challenges still today. Today, we will discuss certain of fintech issues and the challenges impacting to the fintech growth. Next. So let's discuss about the issues impacting to fintech industry. There are two issues, the industry issues and the Sharia issues. So when we talk about the industry issues, there are few common industry issues highlighted by academic researchers and industry analysts. First of all, is a high risk of potential default by borrower, mostly affect the equity crowdfunding and peer-to-peer lending. As much it will impact to the banking institution, so does it impact to the fintech industry, especially during and post-pandemic COVID-19. Furthermore, risks of money laundering, terrorism financing, and fraudulence also commonly faced in the fintech industry, regardless of digital segment. Cryptocurrency and equity crowdfunding are mostly targeted as platform of transaction and medium of exchange globally because it doesn't need the requirement of cross-border jurisdiction. In addition, the risk of cybersecurity compromise are also the priority concern. Study proof about 76% of platform operators believe the risk of cybersecurity compromise is between medium to extremely high. Moreover, the possibility of platform failure or closure is real. Study report shows many of the world's over 4,000 platforms have been shut down. So now, when we talk about the Sharia issues, there are different solutions derived when involved with Sharia compliance based on the purpose, the needs, the use, and concerning maslahah. So first of all, is the mixed business transaction. It will happen when the business activity is involved with the Sharia compliant business activity with non-Sharia compliant business activity. Second is about the shifting of the business activity. So the purpose of funding and transaction will be affected if either one party is shifting from Sharia compliant to non-Sharia compliant business activity. The third, the high volatility, inconsistent and lack scalability. Mostly will happen to the price of cryptocurrency such as Bitcoin. So in March 2020, Bitcoin price fell to 39%, indicates why cryptocurrency is not suitable as medium of exchange. Additionally, the cross-border fatwa forbid the currency not recognized in Islamic trade and central authority. Besides that, Fuqaha prohibit the issuing of money outside the state, which is in the absence of central authority, as it might invite excessive speculation and also the mindset element. So let's discuss about the challenges impacting the fintech industry. So in our study based on article review, fintech is facing 4 key obstacles. These challenges were addressed in many previous academic studies, and mitigation is needed to ensure the long-term success, sustainable, and stay competitive. So first of all is financial obligation. There is the liquidity risk, the credit risk, the interest rate spillover risk, foreign exchange risk, and concentration risk. So liquidity risk happen when the shortage of cash flow requirement mostly happen to the startup company, as fintech relies heavily on platform funding and repayment. So whenever there is credit risk, interest rate, foreign exchange, and concentration risk is increasing, it will impact to the fintech cash flow. Moving forward is the rise of the potential default, the rise of the interest rate, the high exposure of the to single credit counterpart, and also the mismatch of trading currency in foreign exchange. All of these risks signifies how important for fintech to mitigate its financial obligation risk. Furthermore, is the data privacy and protection and cybersecurity. So in data privacy breach is one of the common issue, not only because of lack of awareness, but there are cases due to business model selling information for advertisement targeting, for example. For instance, the Facebook lawsuit in year 2019. Besides that, according to Royal Malaysia Police PDRM, approximately almost 500 million real losses due to the cybercrime cases. The threat of the cyber attack are consistently increasing. Although the anti-cybercrime task force is set up and multi-layer security implemented by whole industry. Moreover, it's about the talent development. So the talent development covering of human talent and technology talent, both are costly, time-consuming, complex to develop, and continuous process. So the question remains is how it will cost to the company and to obtain the right human talent and technology talent, especially fintech require a strong and well-versed human talent to conduct a proper validation of due diligence together with the effective ultimate technology to expedite the due diligence exercise. Moving forward is the legal and regulatory. So many of studies stated lack of policy, regulation framework, and also the standardization. Likewise, the fintech companies require a new regulatory mechanism as standard regulation framework, as it may not necessarily or strong enough to cover whenever there is dispute within the industry. More In addition, it's about the different resolution from different authorities. Currently, the fintech is in between jurisdiction purview of Bank Negara Malaysia and Securities Commission, separated by purpose and the specific use of the technology. Similar to this is the different resolution from Islamic jurists and economists. So that's all about the challenges and the issues impacting the fintech industry. I will pass the next to my colleagues for the next discussion. Thank you.
Now we go to the contribution of fintech to the evolution of capital market in Malaysia. First point is growing up access and inclusion technique. Fintech has significantly enhanced access to the capital market in Malaysia by making investment opportunity more readily available to a broader range of individual business and also business. Through user-friendly mobile application and online platform, people can easily invest in stock and Islamic bonds and other financial instrument without need for the compact paperwork or traditional brokerage service. As example, we have Stashaway, MyTio, and Malaysia currently and have gained popularity in Malaysia. This allow user to invest with a little as few ringgit as starting. Second point is automated investment and robo-advisors. Fintech has revolutionized investment advisory services through the development of robo-advisor. This automated platform use algorithm and artificial intelligence AI to assess an individual risk tolerance and financial goals, also the market condition to offer personalized investment recommendation. Robo-advisors provide cost-effective and efficient investment solutions and attract tech-savvy investors to making their professional advice without the high fees. As example, in Malaysia, we have Hello Gold Smart Saver. It has a robo-advisor application in Malaysia that helps users invest in gold and other asset classes based on their risk profile and investment preference. The third contribution is numerous crowdfunding and financing channels. Fintech has opened up diverse crowdfunding and financing channels. It allows startups, small businesses, and innovative projects to be access capital outside traditional bank loan. Crowdfunding platform enables businesses to raise funds from a large number of individual investors, while peer-to-peer lending connects borrower direct with the lenders. It's eliminating the needs for intermediaries. As example, Pitch In is popular equity crowdfunding platform in Malaysia that enables startup and small businesses to raise funds from the crowd investor. On the other hand, Funded Stick is a peer-to-peer lending platform that facilitates lending transactions between individuals and businesses. It provides an alternative financing option to, to traditional banks loans. Next, Adam will continue explain the others contribution of the fintech to the evolution of capital market in Malaysia.
Assalamualaikum warahmatullahi wabarakatuh. Thank you very much to Dr. Roslan to give us opportunity to present about the fintech in the capital market. So, my name is Adam Fitisha bin Abu Bakar. We still in the third question, which is how the fintechs contribute the evolutions of capital market in Malaysia. So we go straight to number 4. I just continue what Zulfika had done. So number 4 is digital properties and tokenization. In this digital properties, just said the development of blockchain technology have been made possible to tokenize a wide variety of assets, including real estate, artwork, and commodities, among other things. Fintech platform can make it easier to trade and hold digital assets, so increasing liquidity to markets that were previously illiquid and broadening the breadth of asset that can be invested in. Number 5, the contribution is encourage market systematic. The capital market may benefit from an increase in both transparency and efficiency if fintech technologies are implemented. For instance, making use of advanced analytic and large amounts of data can make it possible to recognize pattern in the market, as well as potential dangers and possibility for investment with greater precisions and in real time. Investor and other market participants alike stand to benefit from increased market efficiency. And next, the contribution is a regulatory futuristic, which is the expansions of fintech industry frequently drive the needs for regulatory revisions and new framework which are designed to safeguard consumer and maintain market integrity. Fintech advance can be responsibly embraced by regulatory which allow for a balance to be struck between the promotions of innovations and the preservations of market stability. More financial technology company can be encouraged to participate in the capital market in if laws are made to be transparent and user friendly. And the last one, the contribution that fintech can do is enhance customer satisfactions. This customer is the primary focus of the customer-centric strategy taken by fintech organization. So they have the ability to improve the overall client experience in the capital market by providing more user-friendly interface, streamline processes, and providing more personalized service. This in return can entice a new investor while also helping to keep the one we already have. Although fintechs have the potential to have a significant effect of the development of Malaysia capital market, it is important to recognize that the actual outcome may be influenced by a numbers of factors such as technological progress, regulatory shift, and the dynamic of the market as time progress. Thank you very much. That is from me, Doctor.
Assalamualaikum, I'm Amir. I will present on the question number 4. Who is likely to play key innovation roles going forward? Uh, Actually, we have five entities: financial institution, fintech startups, regulators and government bodies, technology companies, and investors. Are actually important entities that are expected to play an important role to develop fintech in the future capital market in Malaysia. Financial institutions are one of the primary players by integrating fintech technology into their operation to improve their customer service. Financial institutions are well uh, equipped to promote innovation and adoption of new technologies because they have a strong user base, resources, and knowledge. Innovative solution in areas such as mobile banking, digital payment, and robo-advisory services can be developed and deployed by collaboration of financial institutions and fintech entrepreneurs. Aside from that, fintech startups also play an important role in driving innovation in the Malaysian capital market. These startups will launch the new technologies and business strategies to specific market groups and meet customer needs that traditional institutions may ignore. These companies are quick to respond to market development and can deliver equipment and services that established financial institutions may not be able to provide. Fintech business can also collaborate with the financial institution, regulators, and government agencies to build a supportive ecosystem that encourage innovation and growth in the fintech sector. The development and growth of fintech sector in Malaysia can also be aided by their capacity to attract investment from investors and technology companies. As a guide for the implementation of fintech, regulatory authorities and government bodies is play an important role in determining the fintech sector in Malaysia. They will implement policies and regulation that encourage innovation while protecting consumers and guarantee financial stability. They can also create a regulatory framework to support and encourage fintech startups and technology companies to operate and grow in the market. Regulators can also work with other key entities to create rules and initiatives to encourage the adoption of the new technologies and accelerate digital transformation in the financial industry. Regulators and government agencies can inspire investor confidence and attract greater investment in the fintech sector by creating an environment of trust and accountability. In addition to that, large technology companies, also, both local and international, also will help shape Malaysia fintech industry by creating a creative solution, providing technology infrastructure, and collaborating with other players in the same ecosystem. This company will use their experience in areas such as AI, blockchain, data analytics, and cloud computing to develop advanced financial services and accelerate digital transformation. Technology companies also can help accelerate the adoption of new technologies and improve the efficiency and accessibility of financial services in Malaysia by collaborate with a fintech startup and also financial institution. Uh, Last but not least, in shaping the fintech industry in Malaysia, future capital market investors such as venture capitalists, private equity firms, and angel investors will play an important role. They can provide the money and finance needed for fintech business and contribute to the growth of assets under management in the capital market. Investors can also promote innovation by investing in technology business that provide infrastructure and tools to the fintech sector. Furthermore, investors have the ability to support and promote the technology provided by fintech firms, thus positively impacting the direction and development of the industry. Investors can help create a vibrant and thriving fintech ecosystem in the Malaysia capital market by strategically investing and supporting innovative fintech solutions. All these key players such as financial institutions, fintech startup, regulators and government bodies, technology company, and investors will work together and compete to drive fintech innovation, transform the capital market in Malaysia, and offer new opportunities for business and consumers.